how much house payment can you afford, how do student loans impact your ability to buy, and what debts do lenders use in your DTI calculation. That and more in today's video. Hey guys, it's Jose.arvizu, loan officer at Sunwest Mortgage, here to help simplify the homeownership process. And in today's video, we are going to be talking about DTI, also known as debt to income ratio. And the DTI is the exact calculation that lenders use to determine how much house payment you can afford monthly. Now, this is part 3 of 3 in our How to Get Approved for a Home Loan series. If you haven't watched the first 2 videos covering credit score and employment history, please go back and do so, as all 3 of these are equally important when qualifying for a home loan. In this video, I'm going to break it down into simple steps that you can do at home on your own to determine how much housing payment you can afford on a monthly basis. Let's get right into it. So the first 2 videos in our series about credit score and employment history have predetermined requirements that you must meet in order to proceed with the loan. It does not let the lender know how much you can afford. Okay guys, DTI, which stands for debt to income ratio, is the exact calculation that lenders use to determine how much monthly housing payment you can afford. So how do they come up with this calculation? Well, we take all your recurring monthly debts and your anticipated mortgage payment, we add those together, and we divide it by your gross monthly income, which gives us a percentage, and that is your DTI ratio. Before we go any further, let's make sure we know exactly what debts and income is used in our calculation. Basically, if it pops up on your credit report, it is used in our calculation. Things such as car payments, mortgage payments, student loans, credit card bills, and installment loans are used in our DTI calculation. There are probably other things that you pay on monthly, but they are not included in our DTI calculation. Things such as auto insurance, daycare, gym membership, subscriptions. As I mentioned before, if it is not on your credit report, it is not a recurring monthly debt that we use in our calculation. Now for income. We'll keep it simple. Gross income. That is the income that lenders use in this calculation. Gross income is the money that you make before anything is taken out. It is not the money that is deposited in your bank. Okay, so now that we got that out of the way, let's do a quick example. Before we do this, let's talk about the max DTI allowed for each specific loan program. In an FHA loan, the max DTI is 56%, and in a conventional loan, the max DTI allowed is 50%. We're going to use 45 as our sweet spot here. The lower your DTI, the better position you'll be in financially. Okay, so in our example, our borrower has $200 in credit card payments, he has a $500 car payment, and he has $400 in student loans monthly. Now, I told you we were going to talk about student loans, and we'll do that really quick right now. So student loans, how they impact your ability to buy. Basically, what we do in our calculation is we take the total balance of your student loans, so in this example, $40,000, and we take 1% of that, and that is what is used as your debt in your monthly calculation. Okay, so and in this example, our borrower has a gross monthly income of $4,000. So in our DTI calculation, we're going to add up all the current debt he has, which is 200 plus 500 is 700 plus 400 is 1100. And let's say this borrower is wanting or thinking that he can afford a $1,500 monthly mortgage payment. So we'll add that to his current debt, 1100 plus 1500, and he is at $2,600 for his monthly debt. What we do next is we divide that by his gross monthly income of $4,000, and we get 65% DTI. Looking at his DTI, we know that this is too high. The maximum for FHA is 56 and the maximum for conventional is 50, as I mentioned before. So this borrower has a couple of options at this moment. This borrower can keep playing with the numbers and just decrease his anticipated monthly mortgage payment until he's at one of those DTIs, or he can hold off on buying a home and either minimize his debts or increase his income. So let's work backwards on this example. It's a much faster way to know how much you can afford right now. So what we're going to do is we're going to take the gross monthly income of $4,000, we're going to multiply it by 45%, and that gives us $1,800. $1,800 is the maximum debt that this borrower can have to stay at the 45% DTI. So what we're going to do next is we're going to subtract the current debts that he already has, which is $1,100. So $1,800 minus $1,100 gives us $700. So in this person's situation currently, if they had to stick to a 45% DTI ratio, they would be able to afford a $700 monthly housing payment. And as I mentioned before, once you see that number, you have a couple of options. You can hold off on buying a house and either pay down your debts or increase your income, or if this is the number you were looking for, perfect. If you have a co-borrower on your loan, you do the exact same calculation using both of y'all's income and both of y'all's monthly debts. Okay guys, and it's that simple. All you have to do is add all your recurring monthly debts plus the anticipated mortgage payment and divide it by your gross monthly income and see what ratio you get. Or you can work backwards, take your gross monthly income, multiply it by the percentage of DTI that you're looking for, and then subtract your current monthly debts, and you can see how much monthly housing payment you can afford. There are some websites out there where you can get a free credit report once a year, so if you're thinking about buying within the next year, I strongly encourage that you take advantage of that opportunity and do this calculation for yourself. And that is it guys, so this video wraps up our how to get approved for a home loan series. Our 3 videos covered credit score, employment history, and DTI. Please feel free to like and share this video with anyone that you know that is looking to buy in the near future. As I've mentioned before, knowledge is power. The more you know, the better prepared you'll be. Also, leave me a comment on this video of any other mortgage related questions that you have, and please hit that subscribe button so you don't miss any of my weekly mortgage videos. Well guys, that's it for today's video. Thank you for watching and have a wonderful day.